I think we're live right now. Just one sec. Yeah. Okay, ma'am, should I start now?
Yeah.
Yeah. Good evening, ladies and gentlemen. I, on behalf of the BRICS Chamber of Commerce and Industry, take utmost pleasure to welcome you to our webinar on central banking system in the age of FinTech. The BRICS Chamber of Commerce and Industry was founded in 2012 with the efforts of eminent professionals, entrepreneurs, industrialists, bureaucrats from BRICS and beyond, having its headquarters in New Delhi, India, and country offices in Brazil, Russia, China, and South Africa. In the nearly decade-old journey of the Chamber, we have promoted business houses for trade and commerce from all BRICS nations and neighboring countries. The Chamber is empaneled with NITI Aayog and recognized by the United Nations. Our efforts have been recognized by several union ministers of the Government of India and governments of BRICS nations. The rise of FinTech has made it possible for financial institutions and banks to offer digital services that are tailored to the needs of each and every customer. Advanced digital solutions that are flexible and secure are changing the way transactions are being made. The rapid changes in technology are transforming the financial system and will allow central banks to enhance the execution of several of their core functions. It is thus very pertinent to decide and discuss about what COVID-19 has in front of the FinTech industry. Without further ado, I would now like to welcome our esteemed panelists for the day, Mr. Chris Gledhill, Ms. Neha Mehta, Ms. Seshri Govender, Mr. Boris Longunov, and Mr. Bipin Babu. We would also like to extend our sincerest thanks and acknowledge the support of media partner BRICS TV for constantly supporting in all our events. I would now like to request our Honorable Vice Chairman, Mr. Sameep Shastri, to deliver the opening address.
A very warm good evening to everyone present in the webinar. It's my pleasure to walk you through the webinar, introduce you to the speakers and delegates who are joining us from all across the world today to share their knowledge and broaden our horizons. At the very outset, I would like to welcome our panelist, Mr. Chris Gledhill, a reputed independent FinTech advisor from United Kingdom, Mr. Boris, who is the head of the World Economy Chair at the Diplomatic Academy of Russia, Ms. Seshri Govender, who is a senior associate at Weber Winsell, South Africa, which is one of the oldest law firms from South Africa, and Ms. Neha Mehta, who is the CEO and founder of FinTech Partners, who is also advocating women entrepreneurship in a very strong manner. Thank you all for joining us. I would also like to welcome our esteemed moderator, Mr. Bipin Babu, who is the co-founder of Piazza Collection and InnoWork. Thank you, Bipin, for taking out time and moderating this session. FinTech is rapidly innovative technologies enable financial services and the business models that accompany those services. It is present unique opportunities for central banks. FinTech is bringing about a fundamental shift in the financial services sector and reimagining the entire banking space. Nevertheless, the central banking system is facing new and unprecedented challenges. Rightly so. Today's webinar is titled Central Banking System in the Age of FinTech, where we are deliberating on how FinTech has potentially spurred efficiency improvement, thereby in reducing cost and upsurging competition. We hope to provide a platform to discuss possible risks to financial system and debate whether the existing regulatory responses are still effective or whether additional ones are necessary. We hope everyone will have an enriching learning experience and looking forward for the beautiful discussion ahead this evening. Thank you all.
Thank you so much, sir, for those kind words. Since Ruhail sir isn't there, I think we can go on with the introduction, ma'am.
Yeah, Susan, please.
Yes. With this, we would now move on to the most awaited segment of today's event, the panel discussion titled Central Banking System in the Age of FinTech, where we all will be discussing possible risks to the financial system and debate whether the existing regulatory responses are still effective and the future of FinTech in a post-COVID world. I would like to welcome Mr. Boris Longwinov, head of the World Economy Chair at the Diplomatic Academy of Russia. Mr. Boris is an associate professor of World Economy Chair, lecturer, researcher, and scientific advisor at the Diplomatic Academy, Russian Federation. He has previously worked with the Russian Credit Bank in the operational department as a deputy director. Throughout his career, he has been a lecturer in several reputed schools and universities of Moscow, including MGIMO University, Higher Schools of Economics, the Russian Presidential Academy of National Economy and Public Administration, and the State Linguistic University. We have with us Mr. Chris Gledhill, independent fintech advisor, futurist, speaker, writer, and advisor. Chris regularly ranks as a top global fintech influencer and is considered a thought leader in fintech, banking, and the future of financial services. Chris has a both technical as business background with expertise spanning multiple industries and a wide range of disruptive technologies, including blockchain, Web3, AI, metaverse, etc. Next, we have with us Ms. Neha Mehta, CEO and founder FemTech Partners. Ms. Neha is featured in FinTech 50 2019 and 2020, Asia's 50 most influential women in renewable energy 2020, and Global Future FinTech Leader Award at the FinTech Festival Abu Dhabi 2020. Neha is a legal and finance professional with 14 plus years of experience in Asia and Europe. She holds a double degree in law and commerce from the University of Delhi and attended King's College London on Chevening Fellowship. A proud recipient of the British Chamber of Commerce 21st Annual Business Award for the UK Impact in Singapore 2020, FemTech Partners has been highly involved in bringing the UK and Singapore fintech ecosystems together under the effective leadership of the founder, Ms. Neha Mehta. Ms. Seshri Govender, Senior Associate at Weber Wenzel. Seshri specializes in the impact of disruptive technologies on the local and global financial sector. She has advised on the development and implementation of digitalization strategies of financial service providers, including the structuring of compliant digital distribution models and front-end interfaces. She has also advised on the regulatory implications applicable to cryptocurrencies, digital assets, blockchain systems, including decentralized custody services and initial coin offerings. The session will be moderated by Mr. Bipin Babu, who is the co-founder of Payza, Collexion, and Innova. Over to you, sir.
Thanks so much, Suzanne. Really looking forward to this conversation and discussion about, banking.
Bipin sir, I'm so sorry to. I think Mr. Ruhail is also here. Is sir here? Ruhail sir.
Am I audible?
Yes, sir, you're audible.
Ruhail is there. Are you there? You may start. We'll take it in between.
Yeah, we'll take it later.
Yeah.
All right. Thanks, Suzanne. Right. So banking also has some glitches. So did our session. Really looking forward to have this conversation and welcome on board, all the panelists to the session of Central Banking System in the Age of FinTech. I think my experience around central banking or banking, for that matter, comes from a book which I read called As an Outline of Money. I think which says that the banking system can actually be traced back to 600 BC, right? Wherein, according to the book, the present day bankers has three ancestors: the merchants, the goldsmiths, and the money lenders. And then, from there, the evolution of banking one happened, which was the merchants, then the goldsmiths, then the money lenders. Probably, whilst the money lenders failed, that's where the commercial banking started. With that kind of a setup, and if we compare it today, there is huge differences which we have globally. In fact, even in different countries, we talk about banking, especially central banking. So with that, I would want to request Mr. Chris to spread some light on it. I think he has a presentation which he wanted to showcase. So, Mr. Chris?
Mr. Boris has a presentation.
My apologies, Boris.
Yeah.
But yes, we will go with your presentation first.
Okay.
Boris, would you like to present?
Yeah.
Yeah.
Just a second.
Okay, you're the co-host.
Can you see my screen?
Yes, sir, we can.
Okay, just a second. That's okay. Shall I start? Good evening to all of you. It's a great honor for me to be here and to share my thoughts with you. I'm going to touch upon some issues in spheres connected with digital activity of banks and such institutions like FinTech companies. I hope all of you remember that FinTech companies derived from, and I would say that they create a digital financial environment which we use, all of us, we use it now. A few years ago, excuse me. A few years ago, such companies, FinTech companies, they were assistants to banks, for banks in their operations. They helped to transfer money, to make computer programs for banks, but now we see that FinTech companies became the main rivals for banks, and banks compete now not only with each other, they compete mostly with such companies. Digitalization everywhere, and FinTech companies created this share of bank clients who preferred remote electronic interaction with the bank before pandemic. You can see this on this slide, and this slide shows that banks try to be on the edge of digital revolution, and they try to keep their place, main place in the financial sphere, on the financial markets. The pandemic made digital operations more attractive for clients, and these figures now increased, much more increased. Banks transformed their offices in order to meet such requirements of clients. In many countries, number of banks decreased. Some banks disappeared because for clients much more comfortable to use digital operations in their smartphones, applications, and That's why you see approximately 10,000 traditional banking offices were closed. Um, um, Now, I would like to touch upon a problem which, which is behind these many discussions we hear about digitalization. Yes, all such technologies are very useful for clients, for us. But financial institutions have not changed. They stayed the same. And some of them even use new means and new digital technologies in order to impose additional services for clients which are not useful for them. And digitalization created some challenges for society. On this slide, you can see some examples of such challenging factors. For example, poor financial digital literacy, especially among old population. It is a very banking clients are not ready to be so smart as banks are using digital technologies and products. So that's why I may give you some examples. For example, in Russia, one of Russian bank, I want to name this, to call this name of this bank. Recently, it addressed to its clients pensioners, retirees, and he told if you keep holding money in your pension accounts, you'll have high interest rates. But you should know that pensioners, retirees in Russia do not have big pension, and it's it's just an example of a social announcement from banks, or another very popular idea now, green banking. It means that banks have to finance companies which use green energy and so-called. That idea is very well, and I support it, but sometimes it's it's like a campaign and even ostentation. Banks show how good they are in financing green products, green economy, but you can look at this slide. The largest banks are the largest financier for fossil fuel usage. You can see the names of the biggest banks of the world and how much they spent, how much money they spent on such projects which are not green. And I may continue such examples of a social behavior of banks now. For example, big bonuses of top managers. This problem is not solved, hasn't been solved by now, and digitalization can't solve this problem. Banks became even more risky, and they carry out short-term strategies, speculative strategies, and digital technologies give them additional instruments for such operations. And I suppose that digitalization of banking activity seems to be more beneficial for banks than for their clients. That's my point of view. You may agree or disagree with me. That's it. Thank you for your attention.
Thank you so much, Garit. There are a lot of insights. From customary banking to digitization. I think we'll speak more to you, on your inputs, as we proceed. But before we proceed, I would want to request Mr. Ruhail Ranjan, governing body member BRICS CCI, and MD Chandrika Pauls, to please.
Thank you, Vipin.
Thank you.
Thank you, Vipin. To start, I'll tell you a couple of lines about Vipin. Vipin is exactly in FinTech business, and he's a person who has made a lot of strides in the last few years, and we wish that he continues to do so. So with that, I'd also like to thank Mr. Boris for his kind words. I'm sure we all were listening to this and will take note of it. The rise of FinTech has made it possible for financial institutions and banks to offer digital services that are tailored to the needs of each and every customer. Advanced digital solutions that are flexible and secure are changing the way transactions are being made. The rapid changes in technology are transforming the financial system and will allow banks to enhance the execution of several of their core functions. It also must be noted that during this COVID-19, it has become an unexpected catalyst for this technological adoption. In the past, the invention of the banknote, the processing of payments in book entry accounts, and the successive transactions of interbank payment systems to internet protocols have posed consequential challenges to FinTech. However, the scenario is completely altered today, with FinTech bringing about fundamental shift in the financial services sector. It is re-imaging the entire banking space, with banks relocating to digitization. In this COVID, it is my belief that it has taken this sector at least 5 to 6 years forward. Senior citizens are adopting QR payments and digital banks for the first time. Schools are conducting classes through teleconferences. Grocery stores have shifted to online ordering and delivery. Doctors have begun delivering telemedicine. The list goes on. As people adapt to a digital lifestyle, so too will they expect the same convenience and seamless experience from other areas of life, including financial services. FinTech has been a buzzword in the world of finance and has significantly shaped various areas, including banking, insurance, and investments. Nevertheless, the central banking system is facing new and unprecedented challenges which needs to be identified and discussed. Hence, I look I'm looking forward to a very insightful evening with an amazing cohort of panelists who I believe will share light on this pertinent topic. Sorry. Thank you. Thank you, Vivin.
Thank you, Mr. Ray. All right. So I have a lot of questions to ask to all our panelists from a global banking perspective. But before I get into that, I want to get a few liners from all of you one by one, and then we'll get on to a lot of questions. So my first one goes to Chris. Chris, you're there?
Hi, hello.
Yeah, very, very interesting profile, Chris, and really looking forward to hear from you today. So with your fintech experience, spanning in technically diverse arenas, what do you think lies in the future of central banking? In BRICS nations, is there a lot of transformation required? Is it transforming, or are we transforming in the right manner?
Yeah, so I think as some of the other panelists have alluded to, there's a bit of an evolution going on, and pretty significant evolution at that, right? Probably the most significant evolution of money for quite a few hundred years. And all of the central banks around the world are all doing their own little projects. They're doing proof of concepts, they're doing pilot schemes, they're doing consultations, they're doing all sorts of reports and looking into stuff. And they're putting together panels of experts to kind of look into what do we need to sort of factor in when we're redefining money from a central banking point of view. But it's kind of, I feel like we're kind of missing a trick a little bit. It's like, that game that people sometimes play where you say, if we were going to go on a rocket and start a new civilization on a new planet, who would you take with you in that rocket? And people go, oh, well, we need some scientists. Let's get some poets. Let's get some musicians. Let's get some philosophers. We'll get the best of everything and we will, start a new civilization. Whereas if you're kind of reinventing money right now at these panels, we seem to have a lot of technologists and we seem to have a lot of bankers. And I feel like we're missing a lot of seats at the table to factor in some of the bigger social issues that a central banking digital currency brings to the world, really. So there's some pretty significant issues regarding things like privacy, things like financial censorship, things like that we have to kind of factor in. And there's worlds colliding. It's not just kind of financial services as an issue. There's things like data and civil liberties and things like that coming into it. And up until now, things like data economies have been very much privacy centric. It's about protecting people's information, protecting people's data and personal privacy. Whereas financial services is almost kind of like the opposite of that. It's very much about we need to protect the system. We need to protect ourselves from money launderers and people doing counterterrorism, terrorism financing and all sorts of other malicious activities. And it's very much a transparent system. And when you've got these kind of worlds colliding, where you get to a point where you're putting people on essentially some kind of ledger and throwing it all out there, I don't think we're fully working out the implications of some of these things and some of the massive risks that come with putting in place overarching financial censorship of financial surveillance of citizens and potential censorship impacting people's freedom to transact. So I would like to see a lot more discussions happening in that kind of space. There's also quite a lot going on in terms of alternative currencies as well. So the assumption right now, particularly in central banks, is that the next generation of central banking is central banking digital currencies, which is just a more digital version of their existing fiat currencies, i.e. currencies pegged to a particular nation or group of nations. Whereas that's not what's really happening kind of outside of the central banking system. You're seeing via platforms like Ethereum, ERC20 tokens popping up all over the place. Anyone can create their own kind of tokens, and you're getting a whole range of flavors of tokens, some stable coins, some altcoins, all sorts of different ones. We've yet to even get into trade coins and corporate coins. There's a whole range of different coins popping up. And I think central banks need to be careful that they don't lose their relevance in being the overarching owner of who gets to define what money is. And they can take a defensive point of view, like in China, where they're potentially trying to limit the involvement of other alternative currencies like Bitcoin, or they could try and become more of a shepherd or steward of these new currencies and create overarching frameworks for them. But I guess the one thing we kind of agree on is it's kind of quite an exciting time, the next sort of 10 years or so. And I guess we're all kind of having a front row seat in what's going on here. And hopefully a lot of us will be responsible for trying to steer what's going on here in the right direction.
Thank you, Chris. I think what I love about this panel is that there are people who are very pro central banking, and there are people who are pro decentralized banking. I see ICO, advisors. I see cryptocurrency evangelists. So Chris, you are a FinTech influencer in the era of fashion influencers. So I'm going to speak more about Web3 and blockchain and crypto to you in the next segment. But for now, I would like to ask a question to Miss Seshri Govender. Seshri, right there?
Yeah. Can you hear me?
All right, and something which I was reading through your profile, you are so pro blockchain systems. That's going to be so. Should we actually term the session as decentralized banking? Okay. So, Seshri, what I want to ask you is that with so much of fintech happening in the central banking system, how do you think it will impact transparency and accountability of the banking system? Can you give a perspective from South Africa on the same?
Sure. So I think with the advent of fintech in the central banking system, specifically from a South African perspective, we're looking at a new idea of what transparency is. Like Chris mentioned, there's a lot more different kind of risks that we're moving into when we look at introducing technology in the banking sphere. So where transparency issues currently exist in terms of fees that banks charge and the kind of services they provide, and the fact that everything is so interlinked in the banking system, transparency now moves towards the kind of technology that's being used, who's providing this technology, how is consumer information being used, how are the particular risks that are not something that the banking system is familiar with, but which are risks that are more particular to the technology and the data economy. How does that factor into transparency? Within the South African economy particularly, we're looking at the central bank adopting a lot of experiments and moving into a lot of spaces and research points such as open banking, etc. And what we're starting to see is that the role that transparency is playing there is for buy-in. The idea is that these sort of adoption or widespread adoption of these types of technologies would only be successful if the population or consumers are willing to adopt it and willing to take it on. And consumers would only really be willing to engage and take this on if they can trust it. And it's transparency in that respect that becomes so much more important, allowing consumers to understand specifically what this means, what a central bank digital currency means for them, how is it different from what they currently have. And I think that's one of the key points we're going to see when it comes to transparency and the continuous evolution of technology in central banking.
Wow, so fantastically articulated. All right, so Neha, you there?
Yes, I'm here.
Yes. So, Neha, I said in your profile that you've been promoting a lot of women in fintech, right? And I think I'm really glad that this panel is equally balanced. So, in terms of men and women both. So, over a period of time, the field of fintech, has had several gender gap issues in terms of representation. Why do you think that gap exists? And do you think it's reduced? Do you think if reduced, in what part of the world, and what part still needs a lot of work to be done on that?
Sure. Thanks, Vipin. And thanks, Briggs, for inviting me today. So I think when we talk about this problem, it's always good to talk about problems, but I always think that it's better to look at the solution. So default is male, right? Whenever it comes to data collection or when it comes to creating jobs. I'm glad that discussion has changed, the script has changed, and the narration is changing as we speak. So if we look at the unbanked population of the world, we are talking about 1.7 billion people, and most of these are women coming from Asia, so Southeast Asia, right? And my work is to make sure that we amplify world's 50% point of view. We bring women to the center of all this discussion because women face gender divide, digital divide, and financial divide, because only 2% of the VC funding goes to women, and less than 5% of women actually hold leadership roles in the US and Europe. So these numbers are not very fascinating and promising. So I think it makes sense for us to look at where the problem lies. So starting from the very beginning, right? When we talk about the education, most of the times we see, and this is what the research shows, that women tend to change their core subjects, especially when they're studying STEM at a young age, when the grades don't really shape up to what their expectations are, they tend to go for a change. And this happens 40% with women compared to men. And similarly, there's a perception, there's a limiting belief that, the STEM field doesn't belong to women. I think we need to change that narration and the story, because women think that this area of work doesn't belong to me. For instance, we still have these phrases like fireman, liftman, right? We don't really assume women holding these positions. So I think that is something that we should focus on, changing the story somewhere. And at the same time, when we talk about the workplace, right, most of the times, and this is something I have faced personally as well, there's gender discrimination that women have to face from time to time, especially when they get on a mommy track, they're coming back to work. It's very difficult for them to get back on their feet, and they constantly have to prove themselves. So if you survey and talk to women, oftentimes they will say that they had to prove themselves on multiple occasions compared to men. And the retention rate when it comes to financial services, the companies don't really take care of the employees so much, and women tend to leave the jobs because there's not much of work flexibility, or maybe the bosses are not great. But as you said, this panel is great. We have great male allies in all of you, right? So I think the solution lies in actually finding male mentors, and most of my mentors are male. So I think that's a great start, right? Because these are the people who really want to open doors for you. So you need to believe in the mentorship programs, go out and sell your story, sell yourself, because oftentimes when women are asking for funding and for a pay rise, women don't really ask for a high number because they feel they're not able to justify their own presence and what they're bringing to the table. And I have also seen that most of the times when women are participating, in boardroom discussions, they don't get a seat at the table. So there's a very interesting story where women oftentimes say that if you don't get a seat at the table, why don't you get your own chair, right? So I think it's important that you always have the courage to speak your mind, raise your hand if you have to say something. And especially for male colleagues, you shouldn't be interrupting women when they're talking, because it's very hard for a woman to muster the courage and start talking. And then if their male colleagues keep interrupting them, it gets very hard for them to carry on. And at the same time, there's a pay divide as well. So women who are working at any position in the organization, they have to sometimes take a lesser paycheck compared to men. So I think at the end of the day, all of us should ask ourselves, did we do something to help the women out there, right? Because we have them as our friend, girlfriend, spouse, daughter, whatnot. So I think it's about time that we bring that mindset change, because until and unless the male in the society are not willing to put in the effort to bring the next generation, the women will continue to take care of the unpaid duties at home, right? So there's a high need for men to step up, especially now because we're talking post-pandemic work. Most of us are working from home, and women tend to take so much of all these household chores. So I think it's important that men step up, and the line between professional and personal is getting blurry. So we have that mental peace at home as well, where women can thrive.
Wow, I think I listened to each of your words. There's a lot of thoughts which probably needs to go to the central banking folks. But having said that, I would want to emphasize BRICS have a women wing as well. Probably you should do a fintech program along with BRICS CCI there.
Yeah.
Right?
Yeah. Absolutely.
However, one of the offshoots of decentralized banking, which I believe is that it really doesn't care that is it man, is it woman, right? So that problem automatically gets eradicated from a decentralized banking system. So, I'm a huge supporter of decentralized banking. However, on that note, I would, want to ask Boris, Mr. Boris, a question that, being Boris, can you hear me?
Yes.
Yes. So, you've been involved in the banking and consulting arenas. What do you feel will be the challenges and repercussions, put forth by, really advanced fintech in the central banking system? Can you also probably quote some Russian perspective on the same?
Oh, okay. In Russia, activity of fintech company is quite big, and some banks. At the beginning, I told you that fintech companies transformed into banks, but some banks transformed into fintech companies. I mean, for example, in Russia, the biggest online bank is Tinkoff Bank, and it is, I suppose, one of the biggest in the world. So this activity is on the way. FinTech, there are so many marketplaces where fintech companies work and so on. As for regulation and central banking rules, I suppose that it's not enough for us, and I don't know exactly, but I think in the world, this is a problem for the world, for the whole world, that fintech became shadow banks. You know this term, shadow bank, shadow banking. It means that these companies are not regulated as banks, but they operate like banks. They suggest to their clients banking operations, not being a banks, not being banks. So I think that central banks should work out instruments for tougher regulation for such institutions.
Thank you. Thanks for that insight. So, I would want to open up one question for the entire panel, and that would be, as per you, what's the ideal banking scenario for everybody to coexist? When I say everybody, I am also referring to the third world countries as well, right? So everybody to coexist. What is an ideal banking system which should be followed? Is it going to be a centralized one or a decentralized one or a blend of both? Right. I will probably ask Chris to take it up first, and then we can move on.
Yeah, sure. So before I get into the centralized, decentralized, I guess we've got to think about what's wrong with our existing banking before we start looking at what's the ideal banking. And I think kind of what's wrong is that wealth is very linear at the moment. We basically all know how rich we are. Like if you go to a bank, they say like, how much is your house worth? How much money have you got? What are your investments? And they put it in a spreadsheet and say, like, there's a number that's how rich you are. And that's on a scale between like Jeff Bezos at one end and homeless guy at the other end, and everybody's in between on this scale. And I think that's a very unhealthy way of kind of looking at wealth, because in reality, wealth is not about how much money you have. It's about your knowledge, your experience, your education, your connections, your hopes, your dreams, your aspirations. All these things go towards what makes people wealthy. And I think when we're looking at bringing in financial systems to maybe third world countries or underbanked populations, we shouldn't just put in the same system right over the top of like bringing in all the new problems. I think we need to move towards a system that values relative wealth. And by relative wealth, I mean things like if I'm a farmer in a developing world country, my skills as a farmer are very valuable in that particular area, in that particular scenario. If I move to London in England, being a farmer is not particularly helpful in that scenario in the City of London, right? Whereas being a banker in a farming environment is not helpful either. So actually wealth is very, very relative. And I'd like a system that values what's actually truly valuable. So it values people who work for charities. It values people who work in care professions, nurses, teachers, doctors. I'd like a system that looks beyond pure monetary value and looks at more holistic value of people. In terms of centralized, decentralized, I really don't care. And I don't think 99% of people in the world actually care about the logistics and the technicalities of what's going on behind the scenes. As long as there's trust in the financial system, it doesn't matter too much about what's happening. In fact, it's probably actually counterproductive to give people too much view into what's going on behind the scenes. It's like that scene in the film Wizard of Oz, where there's this wizard and then he pulled a curtain back and behind there's just a guy on a megaphone. It's the same. A lot of people think inside of a bank, there's a big vault full of gold. And I think they'd be quite scared to realize there's probably no vault, there's no gold, and there's probably no bank branch soon anyway. And I think actually probably best we don't show people too much about what's going on behind the scenes and actually just focus on the end user experience and try and build something that's a bit more valuing of people's holistic wealth.
Interesting, way of probably talking about what should be a future, right? And you're right, we don't need to actually care is it decentralized or centralized, as long as we're able to give right value to users. That's correct. Shashri, I mean, your thoughts on it?
Sure. I think the question is ensuring we're not adopting technology that we don't need. I think any sort of adoption of technology in this space has to be in response for a need for it. Currently, the biggest sort of need when it comes to technology in the financial services space is to encourage financial inclusion and to ensure that people who are not part or included within the banking space, either because they don't have the privilege of education to understand that you need a bank account and what it means to have a bank account, or that you need a minimum deposit and those kind of things. How do we get those people into the system? And while that can be through technology in a lot of ways, for example, mobile applications that people can use to be part of the banking system, there are certain aspects on the fintech spectrum where you have more disruptive technologies where the risk associated with it can have the potential to create further financial exclusion. But now no longer from the banks excluding people, but rather from the technology or the ability or inability to access this technology being the exclusionary factor. So I think when we look at sort of like the appropriate or the utopian banking system that uses technology, it is one that responds to the needs of its consumers. Otherwise, we risk further financial exclusion, but now as a result of technology and not of the institutions itself.
Right. Okay. That's interesting.
Can I add something on that?
Yeah, please, Chris.
Because I think there's a kind of a flip side to it as well. So yes, financial inclusion brings freedom and includes people in the system, and it's very liberating for a lot of people. There's also a risk that comes with moving people from a purely cash-based economy into a financial system that brings with it the lack of ability to, for example, transact in an anonymous fashion, because then you're leaving yourself open to all sorts of restrictions on where you can spend, what you can spend, and people could have oversight on what you can spend. So unless there's proper protections in place, I fear that in some particular parts of the world, moving people from cashless into a banking system allows somebody to have a switch to turn off their access to that banking system at some point, or restrict what they can and can't do in that banking system. So I feel that we shouldn't be running blind into getting everybody banked, and actually look at what are we potentially leaving behind when we're moving from a anonymous cash-based financial system into a fully surveyed financial system.
No, I 100% agree. I think one of the key elements of inclusion is protection. So if you're bringing the consumers, if you're going to include the consumers, they have to be protected in the system that you're bringing them in. If there's no protection afforded to these consumers, then they're just being harmed. Then it's not true financial inclusion. It's just whoever has the resources to protect themselves wins.
But I think that also has a lot of other aspects to it, a lot of other infrastructural aspects to it. For example, internet penetration. There are a lot of countries where there's no internet penetration, right? I mean, for example, a country like North Korea doesn't even have, it has a less than 1% of internet penetration. Africa has probably somewhere close to 18 to 20%. So that kind of infrastructure support is also required, right? However, I think for different worlds and different set of consumers, probably the banking system has to be different at different stages. For a country like probably China or the US, they should probably focus on, because their people are already banked at least once. The internet penetration is good, so people are already inclusive. There is already financial inclusion happening at some level, right? So and there are other countries where it's happening at no levels. So I think we'll have to bring them to some common level and then talk about major changes. However, I would also want to have Neha's thoughts over the same.
Yeah, so I think we spoke about being, towards an inclusive world, and the key theme for the COVID period has been going from offline to online, right? I've seen that happening with my mom as well. Like suddenly she's trying to use different apps and trying to go online. But if you ask me, I think decentralized finance is where the future lies, especially because when we talk about the least developed countries and the unbanked and underbanked population there, most of the times, especially with women, they don't really own a collateral. So it's not possible for them to start a venture, raise money through a legacy system like a bank, because they don't have a collateral in their own name. And I think that's where we have these new disruptive technologies and solutions coming to aid, right? Because at that stage, we can certainly see how we can measure the credit scoring through different AI models, through their social media activity. And of course, this is assuming that they have the infrastructure, right? Bipin, like you said, they have the infrastructure and the internet connection. So I remember reading this article where Christine Lagarde had said that if you want to make sure that finance works for everyone, it's about 3 Ins. It's about information, keeping it inclusive, and making sure it is, you invest in those solutions. So if you're talking about making sure that finance works for everyone, we need to have maybe gender-specific products as well, because some products don't really work for women. And at the same time, I think if you look at how millennials have got into trading cryptos and getting into this new whole cool thing of investing into cryptocurrencies in the last year or so, it certainly goes to show that the future is all about sitting on your couch and doing these transactions. And that's going to be possible for the millennial generation of people who have access to technology. So to answer your question specifically, I think we're looking at a hybrid model, just like the way we're moving into conferences these days. We're trying to have the presence where, people of my mom generation, maybe they can walk into a branch and be in a position to access to a human interface. But for most people, especially in the unbanked and underbanked, we have seen it happening with M-Pesa, and there's so many stories in India as well, like Paytm, PhonePe, trying to achieve financial inclusion and sustainable development goals through, fintech as a force of good. So going forward, I think if we are talking about how to capture the unbanked population, I think decentralized finance is the solution. And at the same time, investing into making the awareness available and in the local languages, that it works for everyone.
Perfect. Thank you. Thank you, Neha. Boris, you want to add something onto it?
Okay, so some noise around me in our academy. In Russia now is the peak of pandemic, and some announcements are. As for the topic of discussion, I agree that the fintech company and the digitalization process should make more capacities for social inclusion. So I agree with my colleagues that it is very, very important. So that's it.
You on mute, we can't hear you.
Devin, you're on mute.
My apologies. All right. So there's one question which I received on the chat box, and I think it's very relevant. I'm just jumping to that before I ask my questions. So it's a question from a student. The question is that whatever we are taught in our schools and universities is totally around central banking system. Do you think that there is a requirement of changing the syllabus, and chapters are taught to us with the changing times? Do you think cryptocurrency, blockchain, Web3, and things related to the same should be taught to us? So I thought that's a very good question from a student coming in, right? And I really want you guys to take it up and share your thoughts on that. So, Seshri, if you can start.
I mean, yeah, I think it's important to understand the developments in money and finance and where it comes from and how it circulates and how it's evolving. When I was, I'm not going to reveal my age or anything, but when I was in university, when we learned about banking law and stuff, we still talked about checks, and that's become that's no longer a system of commerce in a lot of countries anymore. And so as our understanding of money and the evolution of what money is and stores of value, etc., is developing, as should the syllabus around it.
Chris, I think you speak to a lot of students day in and out, right? So what do you tell them when they ask similar questions?
So yeah, it's a good discussion about should we make children think about how banking works or make banking work how children think. And I think it's important to have kind of one step in the present and one step in the future. So yes, I speak to a lot of students, kind of university level students, about their views on budgeting and management of their money in the existing system, but also future token-based economies, and they're very interested in what's going on there. But also, I've also got a daughter who's 8 years old, and she's very into onboarding, just initially getting pocket money, having a bank account, having a card, that kind of stuff. I think it's important to give children a holistic financial education. Certainly in the UK, it's not part of the core syllabus in the schools, and I think it should be the ability to manage money, manage budgeting, managing household costs and bills and that kind of thing. I think that's going to be fairly universal regardless of whatever fancy digital, decentralized, centralized system we go to in the future. I think basic personal financial management should be something part of everyone's core syllabus. I think whether we want to start teaching them anything beyond that, I think as an industry, we need to work out what the future is before we kind of start briefing our kids on it. I think we need to understand it ourselves.
Okay. Yeah, Neha, do you want to add your perspective into that?
Yeah, so Bipin, for me, I think it's kind of difficult for the universities, just like banks, their legacy systems. So you can't really rely on them to change the course material from time to time. Of course, it's possible for them to invite cool people like Chris to come and speak to them. But I think for me, what has really worked as a person and maybe a professional as well is to just be open to asking questions and being curious at all times. And at the same time, I think, being street smart about it, right? Not just bookish about it. So maybe the person who just asked the question, hats off to this person because, they're taking out time to do this outside of their college hours. So I think it's all about thinking out of the box and being street smart because you cannot really rely on the books to help you in the long run. And I've seen that. I'm a lawyer by training. I have done 3 degrees. Am I really smart because of that? I don't think so. So I think I have to credit other things like being curious and have the courage to ask questions. So that has really helped me in the long run.
So I think Vikrant had asked that question to me. I hope your question has been answered pretty well. I'll go back to Seshri, and Seshri, FinTech would bring far-reaching changes in central banking system. How do you think the system should prepare its governance for a world full of 100% FinTech? Seshri, you're muted.
And I told myself that was not going to happen. I was not going to be on mute and speak. Now I've lost bits. So essentially, my thinking around this, and particularly from a South African perspective, is that it's about having an open regulatory environment, in the sense that it's a lot about monitoring the developments in the industry itself, ensuring that there's an ongoing engagement with stakeholders around the development of technology and how it's going to impact, or the impact it can have, both from the perspective of the actual central bank itself, but also from a consumer perspective, and how consumers would be able to utilize this. There's a lot of risks that come with the development of technology that we don't see in the financial services sector currently. And to a large extent, that has been the reason why there's been reluctance to adopt regulatory policies around FinTech and the adoption of FinTech. It's this fear, in a sense, and justifiably so, that to adopt a technology that has the potential to disrupt the current system and the way in which it operates would harm people. And that's because it introduces risks that for years and years the system hasn't seen before. But I don't think that should mean that we stray away from adopting such innovations, etc. It's about monitoring it and having a system to welcome engagement, welcome development, but at the same time having a regulatory stance of making sure that the technology addresses a problem, and it's not just an open, anybody can, we just accept all technologies, etc. But also ensuring that there are safeguards in place for consumers, etc., who want to make use of it.
So thank you, Seshri, on that. I would want to ask Mr. Boris, that there's been a lot of talk around central bank digital currencies, right? And it's kind of probably becoming an inherent part of FinTech. What are the potential benefits of a digital currency, and what do you think can be the alternative presented by the FinTech industry itself? And is there something happening around CBDCs in Russia?
Okay, I told that FinTech companies, FinTech business is developing in Russia. I would like to add something to our discussion. It is very, some of my colleagues told that clients, people shouldn't transfer decision making to some electronic systems which are created by FinTech companies. We should stay people, because in the financing environment, in the financial markets, we know so many examples when robots make decisions. Half of exchange trade, more than half exchange trade is ruled by robots, the so-called high frequency deals, and FinTech impose us, fintech companies impose us to use such instruments and electronic assistance transforming into they are trying to make decisions to instead of us, to make decision instead of us, instead of people. I think that's a threat, maybe not a big threat for present days, but in future it will be a big threat. So we people shouldn't give such electronic systems decision making. That's my.
Yeah, Boris is very pro central banking, core central banking. All right, so Chris, I have a question for you. Right, I believe the central banking system globally, had a foundation. They've been balancing it for a long while. Right, be it the merchant banking, be it lending, right, financing, so on and so forth. And with a lot of fintech companies coming in, there's too much pressure on them. There's too much pressure on them. There's too much pressure on the policymakers, right? So, what do you think? How is it impacting the decision making of the new tech, the CBDCs, or cryptocurrencies? Do you think it's impacting the policymakers a lot? And are the policymakers doing probably the right thing right now?
Yeah, so yes, it is impacting the policymakers. So they're having to do their job for the first time, maybe in a couple of 100 years. They're having to actually come up with some new systems, some new regulation, think through some new things. So yes, it's kind of a kick up the backside for a lot of very old institutions, and they're having to start, thinking some existential questions about what their jobs and roles are. So yes, it's the whole fintech movement is lighting a fire under the whole thing, which is exciting and fun, but also we've got to, on a serious note, realize that a lot of these regulators have a very serious role. And yes, it's very fashionable in the fintech circles to kind of beat up on the regulators and say, oh, they're moving too slow, or they're stopping progress and things like that. Actually, they do play a valid role sometimes in providing a bit of a throttle to what's going on. There's a bit of a problem. There's a bit of a skills gap that happens with a lot of regulators I see around the world, where they struggle to recruit people who are skilled in some of the newer technologies. And when they have internal people who become skilled in this, they tend to leave the government-backed regulators and go and work for private organizations. So there's a bit of a sort of turning door recruitment problem happening in a lot of regulators, which is not helping. But I think it's fascinating to look at the various noises that have come out in the regulators around the world. If you look at like the SEC in America, they're coming across quite heavy-handed and maybe a little bit clumsy in how they're acting. If you look at like some of the UK regulators, they're trying to be a bit more collaborative and open door and setting up sandboxes and trying to run workshops and having panels and forums and all that kind of thing and start engaging. If you look at what's going on in China, it's very much a top-down diktat into how it's going to be. So there's different flavors which kind of represent the cultures of various places. But I think it's ultimately, we should look at regulation, be it human regulation, or if we get into smart contracts, some kind of algorithmic regulation, as generally a positive thing that should be worked with rather than worked against.
Wow. Yeah, I think there's a lot of insight there. I think we should do more sessions with you, Chris, for students. Right? Probably we can start a small revolution more in a lot of other, at least at a university levels, because these millennials, of course, I'm also a millennial, right? And I'm not very pro central banking, and a huge evangelist of blockchain, been into that for 5 years, and I see the power. I strongly believe it is going back to what we were supposed to be, right? Power lies with the people. However, yes, there has to be some probably benchmarks which have to be set, some standards to be followed. But I think policymakers, as you said rightly, though this is on record, yes, they are being pressured, and a lot of things are happening in a lot of part of the world. Especially if you talk about India, right? The Indian government is also trying to figure out, how to regulate, or legalize, or come up with a framework around CBDCs or cryptos, right? And similarly, in a lot of other countries, as you mentioned, the SEC in the US, right? So, on that note, I would want to take up a couple of questions for the panelists from the audience. So, all right. So, Vinay Kumar is asking that how can sustainable equity be practiced in central banking era in both the conventional as well as fintech? And don't you think homogenizing between central banking system and all other financial firms is a major solution for that? So anybody can take it up. Chris, Neha, Boris, Seshri, we're going to go first.
Yeah, I don't think I really understood the question. Maybe you could kind of paraphrase it.
They're trying to say that, so this question is actually trying to say that how can sustainable equity be practiced in central banking era?
Sustainable liquidity?
Yes. Well, I didn't understand it perfectly either. I'm just going to write that question again for the benefit of all the panelists. Here's this. It is sustainable equity.
May I say, that's an old dispute. I mean, what must be the balance between state regulation and market regulation? In each country should be found their own balance of these forces. So in this particular sphere, fintech activity and central banking regulation, this is the same issue. In some things, central bank must be more active and have more control and have more regulation tools for in order to protect people and savings and so on. But fintech activity of fintech companies, it's a natural force. It's impossible to stop it. It will be developed, and so the thing is, what must be the balance between state regulation, central bank activity, and market forces, fintech activity?
Perfect. Vinay, I think if that answered your question, please send a thumbs up on the chat. So, gentlemen, and ladies, so I would want to take a closing remark from you, on the discussion we have, right? So maybe we can start with Neha. Closing remark on your take on central banking system and what do you see forward?
I think if you talk about how China is, maybe let's focus on China because they have been in the race and also a winner in the CBDC race. So, there has been this huge talk of doing this purely from the intent that they want to get away with dollarization and also try to see how they can break the monopoly, because 90% of the payments are done through WeChat and Alipay, and they want to make sure that the data comes to them. So if this is coming from an intent of just, disrupting the market to make sure that you have the access to data, like Chris said, you want to know who's spending the money and where. If that is the intent, of course, yes, it can also lead to financial inclusion, but that's not the end goal they're looking at. But if we take a closer look at Asia, especially Singapore and Hong Kong, how they have been doing the trials, especially in Singapore with Project Open, they have been using blockchain for and smart contracts, especially for supply chain and healthcare. I think that's where the future lies. They're also trying to come up with their own CBDC and use it in the ASEAN bloc. So if the intent is about, to achieve sustainable development goals and try to see how we can be financially inclusive, I think that will be the right use case, because it's a cause that requires a lot of money. So if you're doing it for the right cause, then it makes more sense rather than just doing the China fashion. Having said that, I think it is also about looking at where we stand today. This is the new normal we are looking at. And it's become very difficult for people to hold on to just the hard cash, right? So during the COVID, I think a lot of us were looking at digital gold, which was Bitcoin. So this is where we want to have the trust. We want to hold on to a currency which is far more superior than just cash. But if we talk about CBDC, yes, the trust will be there because it's coming from the central banking authority. And I just saw the comment, someone had mentioned that Bitcoin and cryptos are not as decentralized as they're supposed to be, right? So I think the verdict is still out. But my final say would be that this is where the future lies. Of course, it is going to be net-baked, it's going to be hard. We will have a lot of loopholes in the system, but eventually we will get there, especially if the intent is right.
Thanks, Neha, for that. I would now ask Seshri for her closing remarks.
Thanks. I think my closing remark on this is just, I think what we're starting to see now with more and more adoption and uptake of various fintechs and the disruption it's causing is we have to become more sort of clear about the role that the regulator is playing when it comes to fintech and the financial services industry, and whether they are whether their role particularly is to essentially decide what the regulatory environment should be, or whether their role should be to enforce abuse of any particular kind of environment through the use of fintech, or essentially the kind of culture that they're creating. Because largely at least what we see from a South African landscape is that regulation, in as much as it's such an uncertain regulatory environment right now when it comes to things like crypto and fintech in general, that there's a reliance on the regulator to take a stand and a stand in the sense that they either legitimize particular types of technologies and the use of this technology. And if they legitimize it, then these fintechs and these startups who are developing this technology have a better environment to stay in the country and continue to develop it. But if they also do legitimize it and something goes wrong, or as Chris said, there's not enough skills with the regulators to be able to efficiently and sufficiently manage and oversee these kind of new businesses and new risks that arise, and something bad happens, then the next question is, well, where were the regulators? But over and above all of that, staying in this sort of uncertain area isn't great as well, because it creates a bit of a hostile regulatory environment when it comes to the development of businesses. So I think it's about regulators becoming much more clearer as to the role that they're playing when it comes to accepting and adopting fintech, etc., in the financial services sector.
Yeah. Thank you. Thanks, Ashri, for that. Boris, can we have closing remarks from you as well?
Okay. Final remarks. My final remarks will be about coming back to my ideas of my presentation. social and asocial behavior, those who work in fintech companies, in banking industry, and especially in central banks, they should think, first of all, they should think about common people and how to protect them, how to make them wealthy, and how to protect them from fraud and other negative form of and criminal forms of business, financial business. So I think social target must be on the first place in regulation of this industry. Thank you.
Thanks, Boris. Thank you so much on that. Chris.
I think it's kind of to reiterate one of my earlier points. I think it's about diversity. If we're going to design the future of things, it's not going to be a bunch of middle-aged male bankers wearing suits and smoking cigars sat in the boardroom defining the future of money, nor is it going to be a bunch of tech geniuses sat in a dark bedroom hacking away at the future of digital currencies. I think it needs to be brought out in the open. It needs to be a holistic discussion with the sort of diversity that Neha was talking about, with gender diversity, but also ethnic diversity, neurodiversity, and class diversity. It needs to be a proper holistic discussion with everyone involved, because this is much more than just defining a monetary system. It's defining a platform that underpins much of society way beyond money. And I think the debate needs to be blown wide open outside of fintech circles.
That's correct. And I think this entire discussion cannot be a 1 hour, 1.5 hour discussion. As Chris was mentioning, of course, this is one of my favorite topics. And I think a couple of things which I also want to communicate to our listeners and participants is you should also invest in learning about the existing system, and trying to identify what's wrong there as per you, right? And also try to learn and invest in learning about fintech, about CBDCs, about crypto, about blockchain, or any other things which are good happening across the globe, and then come to a decision, probably that what is good in central banking, what can be better in central banking, what can be good in decentralized banking, and so on and so forth. So what I would probably would request to our listeners, wherein a lot of them are students from the finance domain, invest in learning it further and further. On that note, I would request Suzanne to please take it up from here. And thank you so much, Chris, Neha, Boris, and Seshri. I think we should have such sessions more in detail. Probably next time we should take up one particular topic and discuss that within fintech. Right? It was really great speaking to all of you and to get a perspective from a global view in total. Thank you so much.
Thank you.
Thanks, Bruce.
Thank you so much, Vipin sir, and all the other speakers for joining us today. With this, I would now request our Vice Chairman, Mr. Ashok sir, to kindly deliver the thank you note.
Good evening. Thank you, everybody. Just respected panelists, organizing committee, and our most valued delegates. It is my privilege to have been asked to propose a vote of thanks on this occasion. I, on behalf of BRICS Chamber of Commerce and Industry and the entire team, wish to extend a very hearty vote of thanks to our panelists, Ms. Neha Mehta, Mr. Boris Langunov, Ms. Cecily Govinda, and Mr. Cherish Gledhill for taking out time for their busy schedule and joining us today to grace their opinions and important words with us. A special thanks to Mr. Bibin Babu for moderating this event so gracefully and effortlessly. I would also like to take this opportunity to place on record our hearty thanks to the entire organizing team who helped in making this event a huge success. We are also grateful to BRICS TV for being our official media partner for all events. I would also like to thank all the delegates who were a part of today's insightful session. Thank you very much and good evening once again to everybody.
Thank you so much, sir, for your kind words. For everyone we will be distributing certificates. There is a form given on the chat box. We request you all to please fill it up. And as a last gesture, I would request everybody to please switch on their cameras for a group photo. Just gonna take 5 seconds. A group screenshot. Request everyone to please switch on their cameras for 5 seconds.
Are we saying cheese?
Yeah, we definitely say cheese. Just 1 second. Yeah. Thank you so much. I will now just stop the recording.